Welcome to the Skilled MBA Finance Case Study Series, where business challenges meet strategic insight and practical learning. Today's case spotlights CY Company, which is grappling with intense market competition that threatens its long-term position. To respond effectively, CY Company must undergo a strategic transformation, a delicate balancing act between marketing strength, R&D innovation, and financial discipline. This analysis explores how CY Company can optimize resource allocation, prioritize investments that generate the highest returns, and build a resilient, future-ready organization. The goal: to enhance competitive positioning and achieve sustainable, scalable growth. CY Company faces a saturated market with intense competition. Leadership has pivoted strategically, boosting marketing and research and development investments. This aims to reignite growth, accelerate revenue through innovation, differentiate products with unique value propositions, and defend market share against aggressive competitors. These strategic shifts are crucial for maintaining a competitive edge and ensuring long-term success. CY Company is navigating a dynamic and crowded market, challenged by both traditional and disruptive competitors. Leadership has strategically increased investments in marketing and research and development to combat these pressures. The focus is on reigniting growth through innovation, differentiating products with unique value propositions, and defending market share against aggressive competitors. The industry faces intense price competition, squeezing margins as rivals adopt aggressive pricing. Rapid innovation cycles demand continuous research and development investment to keep pace. Additionally, shifting consumer preferences necessitate enhanced marketing intelligence to meet evolving demands effectively. CY Company's increased research and development and marketing investments have led to a decline in profit margins. This strategic shift raises concerns about its short-term financial impact. Analyzing the balance between these expenditures and their potential long-term benefits is crucial for understanding the company's financial health and strategic direction. Analyzing the decline in profitability, we must identify factors beyond increased discretionary spending. Is the rise in research and development and marketing justified by future returns? And what is the expected return on investment timeline? Additionally, how does CY Company's performance and spending compare to industry peers and best-in-class competitors? Evaluating marketing return on investment involves analyzing brand equity timelines, customer acquisition costs, conversion rates, and share of voice metrics. For research and development, focus on innovation pipeline success, patent efficiency, time to market acceleration, and product margin improvements. These factors are crucial for understanding the strategic investment returns and aligning them with long-term profitability goals. Current KPIs often prioritize short-term profits, potentially undermining strategic investments. It's crucial to align compensation structures with sustainable shareholder value creation. During strategic transformations, performance-based pay should evolve to incentivize long-term success, ensuring executives are rewarded for decisions that drive enduring growth and innovation. Current executive compensation relies on quarterly earnings before interest, taxes, depreciation, and amortization and revenue growth. Proposed refinements suggest a balanced scorecard with multi-year targets. Long-term incentives shift from stock options to performance shares linked to market share and innovation. Research and development and marketing compensation will directly tie to product launch success and brand equity growth. A transformation bonus introduces milestone-based incentives for strategic pivot success. Implement zero-based budgeting to focus on high return on investment activities in research and development, marketing, and operations. Develop a balanced scorecard integrating long and short-term metrics to reward strategic investments. Establish a stage-gate process for evaluating investment performance with clear milestones, ensuring alignment with strategic goals and optimizing capital allocation. Balancing short-term and long-term goals is crucial. In the short term, focus on maintaining investor confidence, preserving credit ratings, and managing quarterly expectations to ensure operational cash flow. Long-term, Prioritize building sustainable competitive advantages, developing next-generation capabilities, creating intellectual property assets, and establishing premium brand positioning for enduring success. The implementation roadmap begins with a financial reset, involving a comprehensive financial analysis and benchmark establishment. This includes a deep dive profitability analysis, competitive benchmark study, and return on investment framework development. Strategic realignment follows, adjusting capital allocation and incentive structures through zero-based budgeting, executive compensation redesign, and board alignment on metrics. Finally, performance optimization focuses on continuous improvement with quarterly investment reviews, marketing effectiveness analysis, and research and development pipeline valuation. Financial leaders must integrate finance with strategy to align investments with long-term value metrics. Develop frameworks to measure return on investment on research and development and brand initiatives. Ensure financial flexibility to support strategic pivots while maintaining fiscal discipline. Building a data-driven financial decision framework is crucial for evaluating strategic investments during transformation. Align executive compensation with performance metrics to balance short and long-term objectives. Master strategic communication to effectively convey financial strategies to diverse stakeholders during pivotal transitions, ensuring clarity and alignment across the organization. CY Company's case underscores the importance of data-driven decisions over intuition in guiding investments, particularly in innovation and branding, when margins are tight. This approach ensures strategic alignment and sustainable growth. Thank you for tuning into the Skilled MBA Finance Case Study Series. We bring you real-world insights to sharpen your strategic thinking and leadership edge. Mobile, plus 91-87553-00795. Email, support@skilledmba.com. Website, www.skilledmba.com.